Elon Musk, Tesla's CEO, is often hailed as a Renaissance man. This title was bestowed upon him by Cathie of ARK Invests, who, in a recent interview with Peter Diamandis, referred to Tesla as the unsung hero of the decade. What sets Tesla apart from Ford and the ICE industry? Let's delve into it. Did you know that the number of ICE car sales is plummeting at an alarming rate? It's becoming increasingly evident that sales of internal combustion vehicles are unlikely to ever reach pre-pandemic levels. The era of gas and diesel vehicles is rapidly coming to an end, with the number of such vehicles unlikely to ever reach the level attained in 2017. In general, calling peaks is a losing proposition. Either the call is true and will become evident years later, or it's incorrect and will be ridiculed for years. It is certain that the worldwide market for internal combustion vehicles peaked in 2017 and is currently experiencing a structural decline. But now that data for 2022 is available, 86 million internal combustion passenger cars, including conventional hybrids like the Toyota Prius, were sold during the height of the 2017 market. That year, the combined number of battery electric and plug-in hybrid vehicles on the road was barely over 1 million, representing a very small portion of the market. In 2022, the situation was very different. Sales of combustion vehicles fell by over 20% from their peak of 69 million, while sales of plug-in vehicles increased to 10.4 million. In China, the trend is even more noticeable. In 2022, plug-in vehicles accounted for 26% of total vehicle sales, while combustion models saw a 28% decline from their 2017 peak. About one-third of all passenger cars sold in BNEF are anticipated to be plug-in variants this year. The story is similar in Europe, with internal combustion vehicle sales down significantly from their peak. In the US, EV sales are poised for a breakout year with aid from the Inflation Reduction Act. For those of you guys who don't know about this act, it's a government initiative that provides tax incentives and subsidies for electric vehicle purchases. This act has played a significant role in boosting EV sales in the US, making it more affordable for consumers to switch to electric vehicles. A major reason for this is the EV revolution pioneered by Tesla. Tesla is different. It is fundamentally a data business and has built its competitive advantage around it. It collects, analyzes, and interprets enormous amounts of data to guide decision-making processes at all levels in the company. It employs a host of techniques such as AI to analyze data from production lines and improve manufacturing processes. It uses a data-driven approach to overcome the traditional production disadvantages it faced, and it worked. Since 2020, Tesla has managed to significantly ramp up its production and lead the electric vehicle market. In Europe, the Model Y has emerged as a frontrunner, currently holding the title of the best-selling car in 2023. Under its visionary CEO, Elon Musk, Tesla is creating a big wave in the auto industry with many amazing models and, finally, the much-awaited Cybertruck. With its sharp corners and dominating physical presence, spotting a Tesla Cybertruck is sure to be a jarring experience for years, but registration data shows it'll at least become less novel shortly. That's because sales of the Tesla Cybertruck are spiking, according to an analysis of US nationwide registration data by S&P Global Mobility. Because Tesla doesn't break out individual model sales, registration data is as close as we can get to analyzing Cybertruck sales numbers, and the most recent set of data shows strong growth for the expensive electric pickup truck. With more than 3,907 registrations in May 2024, Tesla's work to ramp up production at its plant in Austin, Texas, seems to be paying off. This surge in registrations is significant as it indicates a growing interest in electric pickup trucks, a market that was previously dominated by traditional automakers. Even better for Elon Musk's car maker. The Tesla Cybertruck is winning the electric pickup truck market, beating out Ford, Rivian, and General Motors. More specifically, Ford registered 2,353 F-150 Lightnings in May, compared to 1,237 Rivian R1T registrations during the same period. Approximately 668 EV pickup trucks were registered in May, with 359 EV pickup trucks coming from the GMC Hummer EV. This means that GM's electric pickup trucks are increasing at the slowest rate in the market. To put things in perspective, Tesla just beat Ford in May. Between January and May, Ford recorded 13,443 points, keeping its position as the best performer of the year. Rivian is trailing Tesla with 3,881 registrations within the same period, whereas Tesla has only managed 7,879. What does Musk have to say about this trend? Elon Musk, the CEO of Tesla, claims that just last week, Cybertruck manufacturing surpassed 1,300 units per week, demonstrating the company's intention to surpass Ford in terms of electric truck market share by the end of the year. This quick rise in registrations is even more amazing when you consider how much the Cybertruck costs in comparison to its rivals. Ford's Model E division lost $1.32 billion in the first quarter, while Ford Blue had a $905 million profit. Things worsened. Management stated that by 2024, its Model E losses would amount to as much as $5.5 billion. Ford reportedly lost more than twice as much each EV in the first quarter of this year, according to a source who spoke with Bloomberg last month. The source claimed that Ford's losses per EV exceeded an astounding $100,000. It's a dire picture when you consider that Ford's Model E division saw a 20% decline in wholesale units and an 84% drop in revenue during the first quarter compared to the prior year. This is because Ford has to establish scale to drive prices down. To be fair, Ford is making a lot of effort to minimize these large losses. It has reduced the number of orders it has placed with battery suppliers, and because of the slowing demand, its EV battery plant in Michigan will be far less than planned. Ford has also modified its overall electric vehicle plan by cutting its expenditure on battery-powered cars by $12 billion. The corporation even backed off from its 2021 pledge to have 100% electric cars in Europe by 2030, admitting that it would continue to sell customers cars with internal combustion engines if there was still a need for them. Having said that, John Murphy, an analyst at Bank of America, believes that a more drastic approach would be worthwhile. In short, Murphy thinks Ford and the other Detroit automakers should concentrate on their main line of business, which is producing extremely profitable gasoline-powered trucks and SUVs. Moreover, he believes they ought to reconsider reducing their presence in China, the biggest car market in the world. Rather, the manufacturers ought to dedicate the upcoming years to producing the highest possible profits, while creating electric vehicle technology that can be manufactured at a level of profitability comparable to that of Tesla. It's going to be mission critical to ultimately becoming competitive on a price and cost basis with Tesla. Pushing volume at the moment and losing money doesn't make tremendous sense. To have a profitable business, you really want to focus on some of the next-generation platforms. Murphy continues by speculating that it will take a third generation of EVs, and possibly 4 to 5 years, to become cost competitive, and that even the present cost reductions won't be sufficient to break even. That's a long period to lose billions of dollars per year. Although Murphy appears to advocate for harsh measures, he is correct in many cases. Losing as much money on electric vehicles as Ford does not make sense, and it will negatively impact earnings for the foreseeable future, which is not good news for investors. However, Ford has already created these car platforms and models. Even though it entered the market before it was ready, what's done is done. The solution may lie somewhere in the middle of those 2 points of view, and launch dates may be postponed more and longer while money is still being invested in EV technology to increase profitability more quickly. Currently, the only thing investors can do is monitor the company's quarterly calls closely to determine whether Ford's efforts to reduce its EV investments will be sufficient to significantly reduce losses over the next 18 months. If so, you should modify your investment thesis. Okay, so the ultimate question is, should you invest $1,000 in Ford? That's totally up to you. Anyway, the competition between Tesla and Ford is strong, with many expecting Tesla's wave to be temporary. What do you think about this? Tell us in the comments. Also, thanks for watching. If you enjoyed this video and found it entertaining, then don't forget to hit like and also subscribe to our channel, and ring the notification bell so you never miss any future content from us.